Welcome everyone to video number 5 in our mini course series. Last video, we had a look at some lagging indicators and how that can help you predict stock price movement. This one, we are looking at some leading indicators so you can get in front of the market and hopefully be a very profitable trader. Before we kick off, cheeky self-promotion. If you could like and subscribe to this page or subscribe because we're on YouTube, that would be absolutely fantastic. And if you're looking to increase your knowledge in a step-by-step way in an introductory manner, check out our 30-day bootcamp. Link is below. I give you an email, a task, and a lesson every single day for 30 days to make you a profitable trader. But if you're happy to dive in the deep end and really mix it up and learn 7 to 8 powerful strategies, as well as a lot of other context, head over to our day trading mastery program. Links all below. So we've been focusing on one specific stock. The idea behind that is getting to know a stock in great detail. And once you do that, you can be very, very profitable just from trading one stock. A lot of people think you need to trade everything at every minute, but you can be super profitable just by trading one stock at a time. So when we're looking at key indicators, for leading indicators, there's 2 that really come to mind. So the first one is what's called an RSI, and that's relative strength indicator. And what that does is it tracks the inflows and outflows of money and looking at the momentum of a stock. So if we jump up and go to a 1-year time frame on Yahoo Finance, as always, go to indicators. It'll be right here, RSI. We keep the period at 14 and we go 80-20 as a zones. Now you can change this to 70-30, but 80-20 is a general standard. It can even be 90-10, and I'll explain why those numbers are significant now. So we bring it up and it's going to be an indicator down the bottom. So what it means is it gives you a rank, somewhere between 0 and 100, and 50 obviously being the middle ground. If the RSI is 80 or above, it's said to be overbought, and then it'd be looking to go down. It's reached its maximum for that period, and it's looking to go back to a mean reversion towards 50. The opposite's also true. If it's below 20, it's looking like it's oversold, and it's going to come back towards that 50 mark. So they're the general premises of trading. If it's in an uptrend, like this stock is, Afterpay is, it's generally going to fluctuate between 50 and 70 or 50 and 80. So when it comes back down to 50, that may be a buy opportunity, knowing that it's going in an uptrend. Again, opposite's true. When it's in a downtrend, it is going to fluctuate between 20 and 50. So when it gets back up to 50 and it's an overall downtrend, that could be an opportunity to sell that stock. So we have a look here for the 1-year chart. We look down the bottom, we can see that it is currently at 64. So knowing the information I just said, it's going to trade somewhere between 50 and 80 broadly. And this is right in the middle or towards the middle. So it may have a bit more room to go with the momentum. So it could be a good opportunity to look at buying that. Again, this works really well with some other indicators, but it's really good, quick bits of information. However, if we have a look at previous times when we just run the, look at the screen here, every time that it kind of got to this peak here, if we look at the sort of bottom left of the screen or mid left of the screen, it says it'll 75.15. So again, that's getting higher on our account. The closer it gets to 80, the stronger it is, but certainly when it gets to 70, that's when it starts to look like a position that's running out of momentum. So we could take a short position here, and as you can see, it goes back down, hitting the bottom of about 45, which means we'd end our short position because it's gone below the 50, because it's in an uptrend. So it's really, really powerful information that it's providing. And you can go through and test it out. If we have a look at this little peak here, it was at 75. This peak here was around 70, and it hit around 77 here. So for Afterpay, this really responds to that 75, 77 level. Again, going back over this peak, although it's a bit misleading because COVID happened here, but again, it's hitting around that mid to late 70s before it decreases. So that's some really good information. It's telling you when it's overbought and when it's been oversold, and can give you a good opportunity to get into the market. Now you can apply this on shorter timeframes. It does obviously move a lot quicker. If we go and have a look at a 15-minute time chart, we can see that it's moving up and down, but it's not as powerful. I find this to be a bit better for a longer term sort of trading strategy, particularly outside of that hardcore day trading. Maybe swing trading I think is a lot better because you have to act really, really quickly. We've seen over here that it went from 32 to 35, even though the stock price kind of went down for that period. So it can be difficult to track, but when we get ones up here and it's pushing 70 and then it drops all the way down to 35. So you can do it in a day trading. You just have to make sure you have really powerful software that's getting you kind of up to the minute information. So that's the first one, called the relative strength indicator. It's really powerful. It's one of my favorite tools in the day trading mastery program. I'll go into more detail around it, how you can really use it, and some of the things to look for in convergence and divergence compared to what's happening in the pricing model. So the second one that I want to bring to your attention is when we're having a look at volume. So traditionally, volume is a lagging indicator because we don't know how much is going to be traded for that day. We don't know until after the day's been traded. However, when we combine volume with the price, what we want to look for is a few different momentum indicators or a few momentum positions. So what we want to do is find when price is increasing, but volume is decreasing. When price is increasing, but volume is decreasing, that is a bit of a signal that it's going to turn around. So if we have a look at this example here, this is a quick little example here. It's not going to be great, but it is going to give us that bit of information. So what we see here is we've got a big bar there. It is green, price has gone up, and we've got volume. Price has gone up, volume's shrunk, and for the third time in a row, price has gone up, but volume is a lot less. We can see the volume decreasing down the bottom, and then that gives us our red day. So that's a strategy. If we've got 3 days in a row of volume going up, 3 days in a row of price going up and volume going down, that's a strong signal that the next day is going to be a red day because it's running out of momentum. What's happened here is the smart people have jumped on, they've got on the boat early, and here's everyone else lagging behind. They've missed the boat, they're trying to get in, but it's running out of puff and it's turned around and had a red day. Now that's a really small red day. I'm sure there's plenty of more examples as we look through this stock that give you really good indication. Now, the opposite is also true. When it's going down, if we've got a downtrend, but volume is also decreasing, that's a good indication that it's going to turn around as well. So just trying to pull up an area here where volume looks like it's decreasing and then it has a green day, part of the pun. And that's kind of the premises that you look for. You want to find those days in a row where volume is doing really the opposite, to what's happening elsewhere. Here's a good example here. And these are pretty big bars as well. So what we've got is day one. Day one, it is red. The price has gone down and we've got the volume down the bottom. Day two, price has gone down, but volume's also gone down. Day three, price has gone down, volume's gone down. And that suggests that it's running out of momentum. And then there we have our next day is a green day. And in fact, we've got 2 green bars and then that's pushed up as well. So that gives you a really good understanding of how this works. That's what you're looking for, trading this live, but also back testing to see what happens, when you're looking at it. So have a look at that. You're looking for that convergence. Now, the opposite's true in terms of a mass momentum. If we are getting price and volume going up, that is a good indication. So if we have a look here in these last 3 days, we've got price up, volume up, price up, volume up, price up, volume up. Volume is down, but we'd still make profit on that green day. And we'd exit after that day because we've seen the volume go down. We'd keep it going if volume went up for that day, but it didn't, so we moved on. Another example here, we've got price is up, price is up, volume's up, price is up, volume's up. We've got a reasonable green day here, but the volume's down and it turns red, so we get out of that trade. So that's how it works again. Having a look here, we see volume decreasing slightly whilst it's going up. And then it happens, we've got 1, 2, 3, where we've got a clear decline in volume down here. And then we've got a massive red bar. So if we'd have taken a short position there, we would have made quite a reasonable trade in that period of time. As always, this isn't 100% perfect. No trading strategy is, but managing your risk and getting in on time is super powerful. If we have a look at this momentum indicator, this would have been very profitable. Price down, volume is there, price down, volume there. Third day in a row, it is price down, volume up. Taking a short position here would have been very, very profitable as well. So you can see that it works really well for this stock. It responds to it. Quick way you do it is make sure you've got volume down the bottom and you're just looking for these little runs of momentum here. You can see price is clearly going up and you see a bit of a convergence down there. So it's a really good sign that it's going to turn around. And then the other one is seeing these significant points of the same color. You can see that it's going down, volume's going down, and the next one is a green bar. It's gone up in the opposite way. So that's just back testing that, on the stock that you're looking to trade, and looking for opportunities in the future just to see when that comes up as well. So that concludes video number 5. There are 2 indicators that give you leading information. That's information before it actually happens, the RSI, relative strength indicator, as well as looking at the volume price divergence. Hopefully you've enjoyed the 5 video series. If you've just discovered this one, jump back and watch the other 5. We go into detail and help you around the day trading part. As I mentioned at the top of the video, make sure you subscribe. You get information when I release new videos all the time. I've got the boot camp there for people that are just looking to dip their toes in the market and learn about it in a steady kind of way. That's over on the link below. And then for the guys that are looking to jump in the deep end, looking to make things happen and take their trading immediately to the next level, that's where we've got the day trading mastery for you guys to learn about.